Hi there, traders, and welcome to Trader Structure. So this is the video I've had to redo because, as many of you know, I posted something on TradingView and that got the hammer. I got banned for whatever reason. I think a lot of you, the link that I did post would have been, it's not, you can't view it anymore. So I thought, look, I'll just go and redo it because there's a few things I want to add, a few little mistakes that I might have made, and we'll just go through all the theory and the concepts again. Okay. So long story short, what I'm always trying to do with my trading is, and there's a key thing, I guess, for everyone. You're trying to define, especially for intraday trading, and it's not so much for shares. I mean, it's quite obvious when you're on a bit of a roll, the things trending and things, but intraday trading, and if you're sort of in and out a lot, one of the hardest things to do is try to have some sort of a plan of attack for when you're range trading a market, when you're trading sort of that reversion style of trading, when it's gone too hard and it's coming back to the mean, to the average, or when you think it's going to be a bit of a trend market and you might want to hold your position a bit longer. Okay, so that's one thing. I mean, admittedly, I've had to battle with a bit in the past because I tend to focus on just one thing, a few different things, and I'm trying to apply maybe a trending kind of a theory or market to a range bound market. But more than often lately, I've had some really good days where I've started to notice earlier rather than later when I think the market's going to come back in. Okay, when it might be extended, when I might want to be shorting against the trend as opposed to looking for that sort of continuation trade when it's well and truly extended. Okay, so what I want to go through now is just my key concepts which you can use and implement in your own trading, and you can even look at shares. I mean, there's no reason why you can't look at the concepts or use the concepts in share trading. Whether you might be trading on a daily and use a 30-minute or an hourly chart to get you in those right areas for success. Okay, so you're not going to be trading when the market's extended. I mean, a lot of people will fall victim to, you get that extension, they get all excited, they see the hype on Twitter or whatever it is, especially with shares, because everyone's pumping out all sorts of stuff, especially when they're in. They're doing what we call talking their own book. They're talking up why you should buy it because you want to add to that. They want you to go and buy it and push the market higher as well when they're already in it. Okay, so it's called talking your own book. But what people will generally do will get all excited and buy, relatively in a low probability trade, as in it's already gone. They've got that confirmation they want. Everyone feels more comfortable, but they could be buying at the highs. Okay. And that's not what you want to do. When you feel the most uncomfortable trading at a certain area, it's probably the highest probability trade. It's the hardest one, but it's the highest probability trade where you're going to get the best risk reward setups on, you get the best payouts. Okay. So that's ideally what we're always trying to do. And we're trying to, you're trying to massage your strategy or whatever to be able to put you into those right positions. Okay, so that's what I'll give you a few tips on what I look for anyway, with my trading, whether it be index trading. I do use it a lot. I'm always using multi-timeframes. Okay, whether it be 5 and 1 minute, whether it's a daily chart and a lower time frame for shares, or it might be a 30-minute chart and a 5-minute chart, whatever it may be. Using 15-minute charts a lot in the 30, and you might just refine it with the 5 or the 1. Okay, so that's the concepts that I'll be looking at. I'll be explaining through to you how I go about looking for trades and where I feel like I'm actually improving a bit into the areas where, okay, it might be stretched. I don't want to be buying, a sort of pullback setup because I think it's going to be a lower high and I'm going to have to sell into that market, as opposed to buy the pullback on the 1 minute to the MAs and just dive in without a setup. Okay, thinking that you're going to get that continuation, you're excited it's going to push to another level higher. Look, it very much could do it. And there's been times where I don't buy it because I think it's extended and extends more. And you sit there waiting and waiting and waiting, and you could have been a right trade. But, ideally, it's not about the trades you take, it's about the trades you don't take. I mean, that's what's probably going to improve you, because more than likely, if you're taking everything, you're going to get all the winners, but you're going to get all the losers as well. If you can refine your strategy to try to put you into at least the majority of the winners and keep you out of the majority of the losers, because you've got certain rules, there's going to be times when it doesn't play out to your rules and it does work out. Okay, there's going to be times when it plays out to your rules but doesn't work out. Okay, but by having those rules in place and you've done a bit of back testing, you've done the charts, like every day I will mark up everything. Okay, like I just posted one today into our Discord channel. I didn't trade it at all, but I'd like to post it saying the last 2 days have been fantastic for the way I trade. I wasn't able to trade them. Okay, but I'll always mark it up and circle up because it gets my mindset focused in on what I'm looking for. Okay, and it trains you to really focus in on that sort of setup. Okay, so when it comes live, you're more likely to see it unfold as opposed to not putting in the work and just throwing darts at a dartboard. You're just trading everything. Okay, so I'm getting a bit sidetracked, but what we'll do is go through the strategy, what I'm using, not so much strategy. It's more of a concept. It's not a strategy. It's not hard and fast rules, but I've got rules in place to try to keep me out of the, um, trading long when the market's extended higher, more likely to trade short. Okay, and why I would be trading, what I'd probably be looking for. Okay, we're using the 2 timeframes. So obviously on the screen, what you can see is the Hang Seng. I trade that a lot. As you know, a lot of you listen to this, you know that I trade the intraday or day trade on the Hang Seng, getting more into the DAX. I like the Dow too, but if I'm up late enough, I could watch that. And I'll go through. I've got an example on VGL, an ASX share. Now, if you go through, you're gonna have to go through a few of the the ASX shares to see if that suits you. If the concepts you can actually see them play out, and it can help you refine your trading, get you into the right zones or not. Okay, but I'll just give you one example of, we have a few different examples on the one chart. Right, so firstly, what I'm using, if I'm trading the Hang Seng, for instance, I'll obviously, I'm always prepping the market. You've got to get in that habit. Prep your market, prep your key levels, your swing levels, your everything, where it's traded in that zone before, where it's reacted off as a certain area. Always trade that because that's where the liquidity is going to be. And that's where not just liquidity has been, but it's where your stop's probably going to be. Okay, so the market's going to go from level to level, especially with the Hang Seng. It will go from zone to zone. Okay, and if you mark it up and you get into the habit of marking them up well, the more you do it, the more you'll actually see the key zones that you want to trade off. There could be some sneaky little zones that you might go long off something, and a lot of people will go. It comes into a bid zone, a buy support area they've marked up. Because they've marked it up doesn't mean they're right. You want to see it react off that, but a lot of people will just go, "I'll buy that." They put in their buy order, it comes down and grabs them, and it goes to another straight through. Okay, they get stopped out, and they're wondering why they're getting stopped out a lot. It's because two things. You might have the zone wrong, but you're not letting it give you confirmation. You're just jumping in. And that's how a lot of people trade, unfortunately. And I think that's wrong. That's why ideally, if you're trading like that, you just use a 5-minute chart. Great. It could work sometimes, but I think you can really refine your trading by looking at the 1-minute chart for the confirmation. Okay, the 1-minute chart will be more active to give you more movement. You'll see things start to build a lot quicker, okay, than the 5, and you might get your confirmation on your 1 that it's actually come down that support and it's going to hold. It might flush it and bounce straight back, and you go, okay, I can see what's happening. On the 5, it might not be clear. It might be the 1 candle coming back, which could easily just go straight back down again, start the new candle below the level and keep going. But on the 1-minute, you might see some sort of action or reaction from buyers. All right, so it keeps you out of the trade when you don't want to be in it, and it can get you into a trade nice and early. All right, so that's the idea behind using the 2 charts or 2 what do you call them? Time frames. There you go. I'll get that out. All right, so I'm looking at the 5 and the 1. You got on the left-hand side of the screen. You'll see you got the mouse will be the same area on both. Okay, so the 1 minute's on the right. On the left-hand side is the 5-minute chart, and I'll do that the same for the others, except for BGL, which will be I think I've got a daily on the left, and then the 30-minute on the right. All right, so what I'm looking to try to give myself some sort of criteria or framework to define a stretched market or an extended market. Okay, so I ideally like to use, I've got on the bottom left, you'll see down here, a MACD. And I've worked out, and it's not hard and fast, but roughly 30, between negative 30 and 30 is where I want to trade for expansion. Expansion meaning more of a continuation style trade. It might reversion to the mean. I don't want to be trading in there because it's kind of already there. All right, the extension is way out of that zone where it might be, 40, 50, 60. If it's up there, the MACD is up there. You can see like on this initial one we'll talk about, it's extended. Okay, so obviously I don't want to be trading a continuation style or a trend style trade up there, expansionary, because it's already expanded. Okay, you've got to look at yourself, and there's going to be times when it's going to be extended like that, and you might be right, it might keep going. But what will happen more often than not, it's a low probability trade. All right, so you ideally don't want to get in that. So there's going to be, like I said, the times where it's going to keep going. You're just going to have to sort of suck it up and go, well, that was one that I've missed. All right, but if you're going to take those, you've got to take all of them. And I feel that 70% of the time they won't work. So 70% of the time you've got losers that you don't need to have for the sake of getting that 30% of winners that may not go very far. Okay, you might lose your 40 points, like I have a 40-point stop on a Hang Seng. You might lose your 40 points 70% of the time, and you might only make 20, 30, 40 points on the winner because it's already extended. So there's not much left in that trade, right? So you got to think of the way of probabilities, right? So I'm basically trading between those two levels on the MACD. That's where I'm looking for those continuation style trades. Outside those levels and where I'm looking more reversion style of trades. Okay, so that's your basic premise. And I pick out those two levels because over time I've figured that, more often than not, it turns, you can see the MACD, whether it's a histogram or the MACD lines, they do turn a lot around that zone. All right. And I've just worked on the DAX. It could be different. I'm not sure the DAX is. It might be 10, 20. On the Dow, it might be different again, but that's something you have to work out. Whereas a logical area where it's kind of trending, it might stick in between there. When it gets extended, it's well outside. You hit those movements well and truly, it's quite clear away. So I generally sort of look through this histogram, might look through, and put a line there, and then get where the MACD is roughly turning all the time. But I've just worked out on the Hang Seng, it's roughly 30 and 30. All right, so this first trade, what we'll walk through now is why, it's obviously from planning, it's coming to a resistance zone. You can see up here, and on the 1 minute, it's right up here. You've got that resistance, it's pumped in there. You've got 3 rejections. Okay, that's great. There's a good chance that's extended. I want to be shorting into that. Now, you could have, on the left is where, on the right, on the 1 minute chart is where I would look for the setups. Okay, my prime setups. All right, so I know there that it's extended, so there's a good chance that any sort of buyers up there are going to get caught, and the market's going to squeeze them out just in a pullback. Whether the pullback goes 100 points or it starts a new trend down, we don't know. We don't really care, but we're trading reversion to the mean. Okay, and if we can hold it for longer, great. Okay, if we can't, we might take something out of that. But you're definitely in that situation because it's way above the 30 on the MACD, and it's way above the EMAs. The 20 is above the 50 on my EMAs, and it's way above the EMAs on the 5 minute chart. I am definitely not going to buy in that, especially considering it's pushed up into a resistance zone that I've marked up. So I'm looking for more confirmation that this could hold, resistance could hold, and we get that reversion to the mean style of trade. So what you can see, you go across to the 1. I've just got some few notes, you can read over those. Continuation, you need both the 5 minute and 1 minute MACD aligned with lower highs, high lows. Okay, so we'll talk about that in a minute. Reversion, you want more, they will probably opposite, so you're looking for that 1 minute to lead the 5 minute. Right? And in this case, we ideally want that MACD to be rolling. We want to be on the side of the turn, if that makes sense. When it's crossed over, I think it's the MACD lines crossed below the signal line or whatever it is, vice versa. I can never know which ones they are, but that's what you get, that crossover, and then we're looking for a rough entry. Okay. Ideally, when you get on the 1 minute, you get the pullback to the 10 EMA. Okay, so that, if we can just make that a bit bigger, that first trade was fair enough. It's probably a lot riskier, but I'm taking sort of the breakdown of that. You've got this grind higher, you've got some good rejection there, you got the breakdown, and that was right at 11:30 when the index is just open, so you're probably going to get a bit of volatility. So yeah, you could have taken that, and you've got a good little push down and actually never look back until you got here and started to lift again. Or you could have taken that second one. Ideally, I like the second. I like to sort of push back, it pushes down, reversion to the mean. As soon as that reverts, and you can see where it does on the low of the session, it sort of and it holds. There's going to be more in that move, and anyone that buying it there, expecting it to come back again, and they can get out at break even, or then maybe get a positive trade, is now really realizing that you're on the wrong side of the market. Not only that, you've got new shorts that might want to come in and dive in because they can see that it's more confirmation that it's going to have a deeper pullback. All right, and you can get short in there, and you got the MACD is on your favor. Okay, you don't really worry too much on the 5 minute because it's just how far it is. It's well away from the zero line. Okay, and it's well above that 30, that level there, that zone we want to trade continuation. It's well above that, so it's well and truly extended. You're not too worried about it there. You're more looking at the 1 minute reversion to the mean, maybe back to the 50. Okay, so you can see that played out all right. It gave a few points in there, and then it started to confirm. Maybe you could have been looking for a short there, but I don't like the way it hasn't really paused down and it's come back to the zero line. All right, so if we keep going along to the right, you can see what you've got here. It's not really extended on the 5 anymore, but we can start to see, the MACD is still extended. We're starting to get that roll. Ideally, we start to turn in more of a continuation style trade on the 1, okay? And you can see that it's starting to roll over on the 5, all right? So we're starting to get an extended market that not only is having a bit of a pullback reversion to the mean, it's failing to go higher, and we're starting to get that lower high coming to play. Okay, so lower highs are key. Generally, as many of you know, I would measure that out. If that's the first leg, I would be measuring that out for the second leg down and it gives me some sort of target to go to, okay, if I'm going to trade that lower high on the 5-minute chart. We call it an action leg or volatility leg, okay, but I'm looking at that. Once you get the market had a bit of a pullback, takes out this low, has another go at the highs, fails at a lower level, anyone who really didn't close out there is stupid not to, okay, especially if you're day trading. You're not going to take too much risk on that. Or if you've built a position up here, you've been buying the way down, and then all of a sudden it pops up, and you haven't booked any profit, you're going to start booking pretty quickly, because that is rolling over at a lower level, meaning more shorts are going to start to dive in, and more longs that are in the market are going to exit if they haven't already. Okay, so that's the premise of the concept behind it. You can see that the MACD is there starting to roll over. So all of a sudden we've got in this zone here, look across to the left. I've got my mouse there. You can see on the left, you'll see the MACD is just starting to roll over. I'm pointing to it, but you can't see my finger. But either way, you can see that it's starting to roll over there. So this is kind of a good zone, okay, on the one that you could trade short. Ideally, this is what you want there when the 10 EMA is below the 50. We're on the right side with the EMAs. The MACD has started to hold between that continuation style trade. We're in the right area for that, and you've got the MACDs that are pretty much coming in line together. You can see the MACDs rolled on the 5. Okay, we know the price action is starting to head lower, and the 1 minute's confirming that. Okay, so it gives you some sort of framework to be working. So this here, I like this kind of, if you can see that on the MACD, I like these kind of moves. It comes back in, it's still down, and that's why I don't mind that area, even though the 10's not below the 50 on the EMAs, but it's a good little price action. You're trading the break of this this low here in that box. It did put you under pressure for a little bit, but it did work out. Okay, so that could have worked out. I think this is more of a prime trade. You've got a lot more confirmation here, and you probably, as soon as it kicks off, you can see that when you get it right, there's really not too much pressure on your trade. Okay, and that's ideally what you want. And you can see that it's nice movement down here. Like I said, the 5's rolling over and everything's working out well. Okay, so there was two concepts there. You're working an outside in, okay, or a reversion style of trade, like we said at the start. And then that, luckily enough, that turned into more of a trend trading, or more of a momentum sort of a move, okay, as we hold below these two levels and we're going short, okay, we're going short. We're not really going to be shorting past the negative 30. And also, on the reversion to the mean style, we're not going to be entering a trade, say, in here, because we're back. We're not really extended on the 1 anymore. You want to be extended on both, the 1 and the 5, and you want to get in nice and early. When you're getting in, say, short in this zone, in here, I can just mark that up, it's not the best area to get in short there, okay, because the MACD on the 1's not really confirming. Yeah, you could have got short in there and it just didn't work out. Or you're looking at that going, well, I'm getting more of an easing in this momentum, starting to ease more than anything, as I'm looking to go short, and I'm looking to go short when the 5 minutes already pulled back to the EMAs. Okay, so it's not the world's best trade to go short. But as soon as we get that lower high come into play off here on the other side of this side, the lower high, good area, because the dynamics have changed. All right, so let's go across to the DAX now. Okay, same sort of concept. On the left-hand side, you've got your 5 minute. On the right-hand side, you've got your 1. Okay, so you can see the 5 minute. Earlier on, this is the open here. I think this was the open at 4 o'clock. So it opened here. So we're within that, that zone for a continuation style trade. I've got it at 2021, a negative 2021, thereabouts for the DAX. That's what I'm looking for. So I've sort of got my zone to be working from. Anything well outside of that, I'm looking for reversion. Anything within that and it's starting to push up, I'm looking for a continuation style trade, or a sort of more of a trend trade style. Okay, so you've got, MACD starting to work up around this area, and you can see around this area on the 1. Okay, we're getting a bit extended, but we're still within that continuation style. So even though it's not really a great trade, it still worked out, and it still worked out to plan. Okay, if we had this MACD was working well above that 20 by then, I wouldn't really be entering that. As you can see, as it starts to roll over here, I don't really want to enter, okay, long, because I think it's still getting a bit late in that trade. Does that make sense? So as long as the MACD is up and the MACD is up, I'm looking for that that buy above the MAs. Okay, when it starts to roll on the 1, I'm ideally trying to keep away, or it's probably late. Okay, ideally want to be setting up when I want to be long when it's starting to go up on the MACD and it's within this sort of zone, or I'm going to be going short when the MACD's down. All right, and it's within this zone, and as long as I've got confidence on the 5. right? So we had that earlier on in these sort of zones here, and it was pushing higher. Okay, that was a nice little prep push higher, and you can make some money out of that. But once we start to roll over here, I'm not really going long, and we're starting to get into that extended territory on the 5. So really, longs are off the cards. We're looking for some sort of reversion to the mean style. You get this chop in here. That was early. You got this little pop up here, flush through the highs. Then what do we get? We got a little nice little lower high area below the EMAs. So this one here, it wasn't really set up because on the MACD, yeah, we're still pushing. You may have taken that one and got stopped out, but that's not really prime. I'd rather see some sort of confluence, okay? And we've got essentially a double top, an RTF. It just pops through and then fails. Then we get a good push below the EMAs. We got some sideways, minor consolidation, and then we got that failure. So you know exactly where you put the risk. It's a bit different to that. That was more of a grind down as opposed to some sideways action, and I think that's a good little entry short. And then we've got in this area here, you can see we're starting to get the 1 minute, confluence there as we get that lower high below the EMAs. The 1 minute setting up quite nicely. Here again, it's kind of similar, but you didn't have anything before that. Okay, the price action. So you could be forgiven to try to take that short, but that's not really a great setup for me. This one's a lot better. Okay, there's more action below the EMAs, and they're more likely to cross after you get this failure into new highs. Okay, so that's a good one. That's that sort of reversion style, and then you might just want to push that in as the MACD starts to cross. You might see, I mean, you could have held that in hindsight, but you might just want to, this little pullback, you might want to take some off. You could take some more off here, or you could ride it all the way down. But it's getting you in on more of a reversion style because the 5 minute is extended and it's starting to roll over, and we're getting nice and early in on the one. All right, let's go across to the Hang Seng again. I've got some more examples from the last couple of days. Okay, so this was yesterday's action, and then I'll just go through today. So this is a nice little continuation style trade. So what we're looking at is the 5 minute. We're basing our trades around the 5. Okay, you got this little pop up in the open. The EMAs are down. Basically, the 10 EMA has crossed the 50, but it's come straight back down again. Okay, so you've got this bit of a trap, dragging some buyers, spat them straight back out again. You could, I'm looking at the 5, I'm not really trading short in there. You can see the 1 minute really is kind of not really the world's best action. Then we got this little pop up. Now, as we can see, as it plays out, it starts to roll over here. Everything is lining up on the 5. It's a cracker. Okay, it's around the 0 line on the MACD, and we're starting to get the MACD is rolling over. You can see that about this green candle, and then definitely on this red candle, you start to get the MACD rolling over. So it's a prime area on the 5 minute chart. The MACD is rolling over. It's in our zone between -30 and 30, and it's a lower high on the 5 minute chart, and it's below the EMAs. The 10 is now below the 50. Okay, so everything on the 5 is lined up absolutely beautiful. Now, if we go and look at the action, that same action through here on the 1 minute chart. Now, what have we got here? We've essentially got an RTF. You can say it's here or here. You got that RTF fail on this green candle when it had the push down and rip straight back up again. We've got it starting to fail here, and about here you're getting a beautiful little lower high, and that's on the 5 minute. It's kind of like an M pattern. We love to say. Okay, so we just call that M pattern there. Okay, so I love that. Some M pattern, W pattern, W patterns for buys, and M patterns on the essentially on the 5 minutes of prime when you're trading off the 1. And what we're getting here is a nice little shoulder. Okay, so we're getting that beautiful little shoulder to go short. So ideally, if I box that up to where I would trade it, ideally would, if I could, I would like to trade the break of that low. So I'm breaking. You've got these two green candles made high, 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 new high. All of a sudden, this red candle takes out the two lows of those previous two candles. I call that an LL2. All right. You might want to, for more confirmation, you could let it drift. If it keeps going down, you can go for an LL3. You might want to widen that, but then your risk gets a bit bigger. And I find your results are roughly the same. So that's 48. If we look at the other one, is roughly 37. So it's within my 40-point stop area. Okay, stop zone, stop loss. So that was a cracker, and then you can see it starts to play out. You've got a secondary. If you didn't take that, you've got this consolidation sideways, then you've got your secondary shoulder here. It's all playing out quite nicely until you start pushing below that -30 on the 1 minute, and then it's probably a bit too late. Okay, not that it didn't work out, it's just that it's starting to get a bit too late. You're waiting for too much confirmation. You ideally want to trade that. You got RTF and the shoulder, prime, especially when the 5 minutes it's got confluence. Okay, I reckon that's an absolute prime trade. It's nice and early into a potential trend, and your risk reward is it's quite good. It's skewed to, it's skewed positively, 2, 3, 4 to 1. All right, so I reckon that's a prime little trade. Now, if we get along to the action today, I'll just move my charts across. Just going to get across. There we go, and then we'll just draw up something there. Right, have to go right across. Actually, would have been smarter to. There we go. So what we've got, you've got the 5 minutes quite clearly. It's turned up. We've got the open, pull back to the MAs, popped up, pull back to the MAs. So, okay, we know what we're looking for. The 5 minutes, we're basically looking for some sort of trend trade. You can see that the MACD was ideally above, it's not really prime. I didn't really see this until just then. It's above the, what do you call it? My lines, my 30 and the negative 30, okay? But it's so close to it, I'm willing to give that a chance because the MAs are quite nicely, the strength is up. So ideally, I'll be looking in here, this secondary pullback to see what happens. Now, this is the little W pattern. I was just mentioning the M. Now, that's your kind of your W pattern there. We've got push down, green candle, another push down, and a red candle. Okay, so you could trade long off that. Okay, I find that's quite a good little trade. It's pulled back to the MAs here, and it's roughly in that zone. Okay, if you are wrong and it comes up and it comes slamming back down again, you know where your risk is. All right, you haven't got such a big risk. But as it played out, you've got nice, you've got a few points up your sleeve. You've even got a little trade, as the 5 minutes moving higher, you're in about this zone here. So you're kind of, that first green candle, you're into the second green candle there. You've got a nice little, continuation style there, but it's getting a bit late in the trend there. And obviously it's popped up and we've had this big pullback. All right, so you could just about go short in here, as is in a reversion style of trade. You could have gone short off that little shoulder in there. That's probably a legitimate reversion. You can see on the one, it's well above the 30, the plus 30 area. It's well into that extended territory, and on the 5, it's extended as well around here. Okay, you can see that there, and so that's a legitimate reversion style trade. Then we come back down and we start to hold up again. So now we start to swing back up and see how it's right on that 30. That's what I love to see. Okay, it's right on that 30. It's starting to swing back up again. So you've got a little spot here, a little spot here where you can go long. Okay, and you can see that the trend is still quite nicely with the 5-minute chart, although you are in that extended. But it's such small risk here that, and I like the way the 1 minute's setting up quite nicely. It's playing out quite nicely, and it's a good pullback. It's back to your negative 30, and it's starting to rally up again. So on the 1 minute chart, you're in the right areas with your MACD, your EMAs, everything. You're above the EMAs. All right, it's probably not the world's best on the 5 minute chart, but legitimately it played out quite nicely, and you know exactly where your risk reward is there. So that's, although it's not perfectly to plan on your 5, it is a good little trade. And even if you're going to stick to just your plan, exactly that, you've got this nice reversion trade, and that probably paid out. It's 43 down to here. You've got over 100 points on the downside before you started to reverse. Okay, so you could have taken a 50 partial, another 100 partial, and ran the second one to say 80 or 70 points or so. Okay, so worked out really nicely. Now let's get on to the last one. We've got about 28 minutes there. We'll try to finish up there on BGL. Okay, so what you can see is I've just marked up a few kind of extension trades area. So we've got the 30-minute, 30-minute on the right-hand side, and I've got the daily on the left. Right, so if we just follow through on the left-hand side, you can see so in here, you could have just about gone short. So if we look across to the right-hand side on the 30-minute chart, you're waiting for kind of a setup. Maybe you could have got short in here, which is on that red day, which worked out on the MACD. Price action, you got your stop above that high. Okay, fair enough. You probably got stopped out there. You could have got short in there. And you can see that it was starting to roll over on your daily chart as well. You're in the extension zone on your daily chart. It just didn't work out. Now, if you keep pushing along to this second phase, it was extended again on the daily. It had another little push up into the new highs. You got some divergence there. Essentially, you got a higher high with roughly the same area on your MACD. So you're starting to get divergence. You got a little minor double top on your daily. So ask yourself, would you go long there? I know I wouldn't. I think that's pretty stupid, especially just after that. On this little minor pullback, would you go long there? when you're sitting in an extended market on the daily chart. So what's the probability of it continue on? Yeah, obviously sometimes they do, but I think the percentage is more in the 10% time that you're going to be right. So you're willing to take that trade there, which means you really should be taking all of them. You don't pick and choose which ones you're going to take with that kind of price action. And I reckon 80 to 90% of the time you're going to be wrong. Is it willing to take that 10% where you could be right for the fact that 90% of the time or 80% of the time even you're going to be wrong, all right, with that kind of price action in an extended market? It doesn't make sense to me from a probabilistic standpoint, right? So that's not where you're going to get your edge in your trading. So yeah, are we going to go short? Yeah, there's a potential that we've got a little RTF here. We've got a little lower high starting to build. So if we go across to the 30-minute chart, you can see that's your double top area. That's your RTF area in here. I'm just drawing that up again. That's your RTF area in here. And then we've taken out, let's just mark that up a different. So you've got consolidations through there. We've taken out the low. We'll pull back, retest that area, and we're starting to hold. It's starting to get pressured, And unlike that first area where we took the short, say, in here, and it just didn't work out, we could have taken a short, with a break of even in here. So you just took that risk there. Okay, similar, but this time it's worked out and it's trended all the way down. So whatever you lost here, you've made back that plus more, okay, on the short side. And you can see how it's worked out quite nicely. Now, if we walk along, as we get along to some longs, you can see now we've had a bit of a flush down. We're starting to get into that continuation area where we want to look for, some sort of, we want to get in earlier for a continuation or a trend style trade. And then you've got these areas here. Okay, we're looking at bouncing off, maybe not so much in here. You can see that that's that zone 3, that flush through there. Maybe after that, okay, it's pushed through that low and failed straight back above it. Now it's starting to hold it. You might want to go long here. You've got any number of areas to get long, because now you know that you're in a nice little area on your 30-minute and on your daily, and the probability that it's going to extend higher is a lot better, okay, than trading long, right up here when it's the extended market. Okay, so there's a few key examples of how I'm trying to use multi-charts, and I'm trying to use my MACD, I'm trying to use momentum. Everything I'm doing here is based around momentum. Okay, I'm using momentum on a 5-minute and momentum on the 1. I'm trying to piece them together to get into the prime areas of where I want to trade. Okay, so if it's an extended market, where it's extended up, I'm not going to buy. Extended down, I'm not going to sell. Okay, I have, obviously I've done that. I've done stupid things in the past, but I think more and more often I'm clearing out those stupid trades and I'm focusing in on the good trades, okay? And that's what's going to improve my stats, okay? Longer term, it's going to make me more profitable, okay? And it's going to make things a lot easier, all right? So I'm just focusing on those good quality trades. Yeah, like I said, there's going to be a bunch of them that work out. There's going to be a bunch that, okay, it's against your plan and it still works out. You don't worry about those. Worry about the ones that work out to plan all the time, all right? And stick with those ones. All right, that's all I want to talk about, guys. This is going to be on YouTube, so it'd be great if you can leave us a like and give us a bit of a thumbs up on YouTube. Help us spread the word, and more than likely, I'll be posting this on our Discord and everywhere as well. Feel free to put it on your own socials and help me spread the word, all right, and help us get out there. Anyway, guys, thank you very much for joining me, and we'll speak to you again soon.